Welcome to the Crypto Teacher. And guys, please like and subscribe. If you do like what you're listening to, please spread it to your friends and family. It's a very imperative time we get back to learning finances and understanding how the world really works, because once we understand, we don't fall for the same tricks because we understand everything is planned. Now guys, we're here on the weekend. Now we know what happens on the weekend. Institutional investors come in. Why? Because the stock market is closed. Crypto doesn't close, open 24/7. So the investors come in on the weekends. What are we going to do? We're going to stick to the fundamentals. We're going to look at the stable coins. We know when to bet that it's going up or short it, either one. But the fact is, the stable coins are going to tell you what's going to happen. As we saw yesterday, we saw Tether take XRP again. So eventually it is going to be in the third spot. So that's where it's going to be at. So we clearly see it getting pumped every day. As soon as crypto went up a little bit, we saw what? XRP take that third spot again. But yes, Tether's going to take that third spot permanently. Remember, I told you that until we really get into that bull market. And then, of course, all the stable coins will pump the rest of the cryptos that do survive the altcoin holocaust going towards the end of the year. Now, guys, we have Bitcoin in Venezuela being accepted to 20,000 retailers. We know the fact is that cryptos overseas is moving very, very fast. Now, don't forget about Venezuela has the petro cryptocurrency also. So that's something that's not actually talked about. And we have Coinbase, Polychain, Tezos, also Cardano Foundation, Bison Trails, Avaya, Binance.USA, Web3 Foundation, met with the SEC on blockchain. We already know the regulation is coming. The fact is that they just have to, of course, act like this is not part of the plan. This is all planned out. So, of course, like I stated, this summer going into fall, I've said it from the beginning. Go back and look at my videos. We're going to start seeing regulation, Bitcoin ETF all of a sudden come about. And, of course, they're going to price it in before they make the announcement. That's why we all have to get ourselves in position. Now, getting into Tether. Tether has gained capital over 10 billion. So we see how they're creating the liquidity. That's the reason why you know the dollar is not going anywhere. Of course, right now they're pumping dollars everywhere. So it's trillions of dollars everywhere, all across the globe. They can't afford to get rid of the dollar right now. So what do you do to it? You digitize it. That's how they can afford to keep printing and printing and printing, because they know they're going to go to virtual, so they don't have to worry about doing that. You know how much money that's going to save them? So that's all that we're headed to. So that's the reason why they have to keep printing all this Tether virtual currencies, USDC. So therefore, when it's time to hit that switch, it's not going to hurt the system. So guys, we have to get in with the plan. And I'm going to leave you a video from one of the creators of Tether. He's not giving you the whole story because, of course, we know the Fed is pumping Tether. So, of course, he's not going to say that. But the fact is that he gives you a breakdown of Tether. So if you're new to crypto, it's a very good explanation of how Tether is working. Same way sort of how XRP and XLM is going to work also, similar to that. But, guys, getting into world news, we have Berkshire selling their stake in Goldman and JP Morgan. Like I stated, the only reason why they're doing this is the same thing they did in 2010. They're just freeing up money to do other things. That was the signal of the new bull market. They just want to keep this economy going until the election. That's all this is election year. You had Ray Dalio talking about we just need to reform capitalism, not get rid of it. We need to get rid of it completely, because the way they have capitalism set up is the rich get richer and the poor get poorer. So that's how they have that set up. Now we have Kramer talking about the China and the U.S. trade war. Guys, we all know this is part of the plan. China and U.S., we're going to go through World War III. I'm going to get into more videos about that, especially how Japan is connected to all of that. But the fact is that we're definitely headed to it. So we're going to start seeing tensions rise. Well, you're going to see the acting of the tensions rise. Because that's all this is, the acting job. And lastly, guys, we have JCPenney going through bankruptcy. I'm definitely going to keep my eye on that because, of course, if it turns OTC, they're going to be basically pumping and dumping it. So you definitely want to get in, do your research, but that's probably easy money for stock there. But guys, that's all I have for you. Don't forget about the books, Cryptoteacher and WO book, the website, btcteacher.com. So therefore you can learn about the economy. I'm going to be redoing the website also. Basically you have your stocks, bank stocks, cobalt, your chip stocks, gaming. Guys, gaming is going to be so big. When I tell you gaming is going to be so big, it's going to be bigger than any NBA, NFL. It's going to be so big. Also, guys, you have everybody sitting at home. Don't forget about those stocks. The biotech stocks, don't forget about those. Still selling the C word. Also, basically, of course, all these people out of work, anxiety, depression, what are they going to do? They're going to drink. They're going to smoke weed. And guys, I want to thank y'all a lot for donating to the Cash App, Patreon. And just like I said, guys, don't forget about the weed stocks and the alcohol stocks. And y'all have a wonderful day.
Today I'd like to share with you the origin story of Tether. You might know Tether. Tether was the world's first stablecoin, the first coin that was backed by an asset, in this case a dollar. Anyway, let me tell you a little bit about how stablecoins got invented. So, story starts about 6 years ago. Now at the time, the crypto space was in many ways a lot different than it is today, in some ways similar. Where it was way different is there were virtually no exchanges. And the few exchanges that existed, almost all of those, what we called altcoin exchanges, had no banking. Anything that wasn't Bitcoin was an altcoin. So what you would do is you would go to one of the few exchanges where you could actually send money, buy Bitcoin. Then you would transfer that Bitcoin to the alt exchange and use the Bitcoin on the alt exchange to buy all these other tokens, right? All good. All good except, remember, it's very volatile. All of the cryptos are still volatile, but they were just as volatile then. And every once in a while, in my case, 3 times a day, I wanted to escape the volatility. But how do you escape volatility in crypto vis-a-vis the dollar? Well, you sell your crypto and you shift into cash. But of course, the exchanges have no banks. So what do? You take your crypto on the alt exchange, you convert it into Bitcoin, send the Bitcoin back to one of the few exchanges that actually had banking, sell your Bitcoin there, have them wire transfer you the money. The in and out of that whole process took a week. Because what would happen is you would get your wire, and then you'd be like, but now I want to be back in the market. So send the wire back to the original exchange, get it converted into Bitcoin, transfer it over to the alt exchange. This was how we lived. Well, my partners and I started to think about, wouldn't it be great if there was a token that behaved like a dollar? So you could just actually mimic a dollar and you could transfer into that token? Well, the only way we could think about doing it was to actually issue a token that was backed by a dollar. Simple conceptual concept, right? So we're like, hey, we can do this. Oh, but what blockchain should we use? Well, as it happened, we had just finished working with some people on something called Mastercoin. Mastercoin, by the way, was the first blockchain to incorporate an intelligent layer, what we now all call smart contracts. Mastercoin was faster, cheaper to use than Bitcoin. We're like, all right, let's issue Mastercoins that will back this new token that will be collateralized by a dollar. So we got the concept down. We got the blockchain, we got banking access, we even have an exchange partner to test this whole thing out. So that was 4 years ago. And what's happened since? Well, that token, Tether, now trades over $4 trillion annually. And something I always thought was really neat, This was the first time I experienced using blockchain technology to solve a blockchain-induced problem. So that was pretty cool. Let me mention a couple of other surprises from my experience creating Tether. The first really surprised me, which was it took a lot to explain the concept to people, which surprised me because I thought, wait a minute, tokenizing a US dollar? If you're a crypto exchange trader, how hard is this going to be to understand? But the typical reaction was, you're going to tokenize the dollar, but the dollar's already digitized. It already can move at the speed of light. Why would you even need to tokenize it? Well, we're like, well, wait a minute, you're not familiar with the pain points of trading cryptos. And of course we would go into that, and sometimes they would get it, and sometimes they'd still be like, we don't really understand. Just like today, for all you crypto people, when somebody says, what do I need Bitcoin for? I've got a PayPal account and I always use it to buy something on Amazon, and I'm a US citizen. What do I need it for? Answer, you probably don't need it. But there's like 7 billion other people in the world who really could use something like that. So I thought that Tether should trade at $1 plus the value people got out of it from it being tokenized. Think of like if Litecoin also came with $1 attached. You'd think, well, it's the price of Litecoin plus $1. Since each Tether was backed by $1, but not bolted to the dollar in terms of evaluation, it's like we didn't stipulate anywhere that it was only worth $1. I thought Tether would be worth $1 plus something else. But in fact, no. People valued it at $1 and only $1. It says a lot about human nature, and it actually shaped how I think now about security tokens and how they'll be valued. When we collateralize a token, we tend to remove all the other qualities that token has other than the value of the collateral. And anyone building these sorts of tokens in the future should be thinking about that.